What's up, you guys? Welcome to the Tukey Supply and Demand Bootcamp. For this video, we're specifically going to be going over how to draw out your supply and demand zones on the charts. Now, if this is your first time seeing me or you don't know much about me, I've been trading since 2022, trading options. I first started in the markets 2020, but since 2022, I've been trading options and trading with supply and demand, and ever since then, I've continued to build my overall knowledge on supply and demand and the system that I trade with based off of supply and demand these past couple of years. So let's go ahead and hop on into this video and cover how you can start drawing out supply and demand zones on the charts. Now, also keep in mind there are going to be a ton of videos within this bootcamp, so feel free to choose which videos you think will be best for you in any particular order. And if you guys have any questions or whatever the case may be, feel free to always ask me in the Discord. But let's go ahead and hop on into it. How can we draw out our supply and demand zones on the charts? Now, let's go ahead and start with a supply zone and how we can draw out a supply zone. Now, majority of the time, I am either drawing my zones out on the 5, 15, or 30-minute time frame. Keep in mind, the more you're able to match those certain zones within multiple different time frames, the more confirmation you actually have within that specific zone. So, for example, for this example, let's just start on the 30-minute time frame, and then we can kind of narrow it down from there. So one of the biggest things that you want to look for in terms of looking for supply is obviously seeing an aggressive move to the downside. Our supply zone on the charts is essentially just labeled as an area where price previously had a excessive amount of selling pressure being inputted on the charts. Now, as you guys can see right here, completely clean charts. We're going to go over this together. So boom, we see right here we have an aggressive push down, aggressive move to the downside off of this high. Now, another thing that you want to look for other than that aggressive move is either looking for a strong high being created or a strong low. In this case scenario, since we're drawing out a supply zone, we want to look for a strong high that was created that then led to an aggressive move to the downside. Aggressive move is just what's indicating those excessive amounts of selling starting to actually be inputted. So boom, right here we are on the 30-minute time frame. We have a strong high being created, then led to an aggressive move to the downside. Now, what we want to do is we want to mark out the candle that started the move, essentially, right? Because like I said, these supply and demand zones are essentially just price ranges where price either presented an excessive amount of buying or an excessive amount of selling. So we want to go ahead and we're going to mark out this black candle right here, this tiny black candle, and we're also going to connect it to, this blue candle right here, because pretty much these two candles are what started our supply zone. So let's go ahead and mark out these two candles, just get our zone out, very, very simple, and mark out those two candles. We then want to extend this zone all the way out, and as you can see, we would wait for a retest back into that supply zone that we had drawn out. So boom, price does its thing. We finally tap back into that supply zone, and as you can see, once we tap into that supply zone, literally to the tick, we get a beautiful rejection, an absolutely insane move to the downside right off of that supply zone. So boom, literally would have caught the high on that move all the way to the downside right off of this supply zone. So if we were to go into replay mode, for example, and mark out this supply zone, we would go ahead and let that play out. Price then taps into our supply zone, and you can obviously start to see really good signs of selling pressure being inputted from that initial supply zone. We start to see that overall selling momentum continue and follow through, and then boom, price just continues to fall lower and lower and lower right off of that supply zone. So boom, that would be a perfect example of how we can draw out our supply zone. Keep in mind, I'm going to be creating multiple videos on how we can actually get good confirmations when trading within our supply and demand zones, how to find the best confirmed supply and demand zones, etc. Right? This video is just covering how can we draw them out in the first place. So let's go ahead and find a example of demand, and then we'll do another example of supply, and then we'll do another example of demand. Let's go ahead and get out of here real quick, and then let's move on to an example of a demand zone. So just how we did for supply, we want to be looking for, in this case scenario, since it's our demand zone, our buying zone, we want to be looking for a strong low being created, then led to an aggressive push or move, obviously, to the upside. So let's go ahead and look for some type of strong low that was created that then led to a strong push to the upside. And I'm sure you guys can see exactly what I'm looking at here. We have price doing its thing, moving down aggressively, then leads to a strong low being created, then obviously an aggressive push up to the upside. Keep in mind, this is on the 30-minute. We're going to kind of narrow it down so we can get some extra confirmation, but I'll show you guys that very shortly. Now, in this case scenario, what we would do, like I said, we want to mark out the candle that started that zone. Okay, we want to mark the candle that that started that move. So the thing is with this one, and pay close attention, is the candle is way too big if we were to mark out that whole thing. And what that kind of does is it gives us some indecision when having such a wide zone. We don't know exactly where to enter within the zone. That's why you want to keep your zones at a minimal size. Also, what keeping it at a minimal size does for you is it reduces your risk. Because for me, majority of the time, if not all of the time, my stop loss is always in the same spot, and that's simply a break below demand or a break above supply, just pretty much having our stop loss at an invalidation of one of those zones. So with having such a wide zone, what we're actually going to do here is we're only going to mark out the bottom half of this zone, okay? We're only going to mark out the bottom half of this zone. So as you can see, pretty much mark out half of that candle. And sorry, not bottom half of the zone, the bottom half of that candle that started the move to the upside. Okay, so the way you can do that is you don't have to do anything too exact, and just pretty much match up the halfway point of that large candle and then extend it out. Keep in mind, you only want to mark out the halfway point of a specific candle if the candle is fairly large, like this one. As I showed you guys earlier with the supply zone, you can see the candles that started that move initially are very small. Therefore, there's no need to mark out the halfway point of those candles. So we marked out the halfway point, and as you can see, treated this as our demand zone, obviously. So demand zone essentially just being our buying zone, an area where we anticipate buyers to take advantage of that area heavier than usual. So boom, strong low being created, then led to an aggressive push up. We go into replay mode, we play this out. Let's go ahead and just put it on like 3 times speed and then have that play out. So boom, taps into our demand zone. Obviously, we're not covering confirmations within our supply and demand zones for this video. There will be another video covering that. That's going to have a ton of sauce as well, so definitely check out that one. But boom, tap back into this. Beautiful rejection right off that demand zone that we had marked out together. And nice continuation up. Right? Beautiful move. So that would be another solid example of how we can mark out our demand. Let's go ahead and see if price ever also tapped back into that. So looks like it was fairly close to tapping back in, but not yet. So also keep in mind when trading with your specific supply and demand zones, you don't only have to trade the first rejection. You can trade the second rejection, the third rejection. I'd say anything after the third rejection would be way too much. Keep in mind, the more price taps into a specific zone, the weaker that zone will get. So let's go ahead and switch back over to a supply example and then another demand example, and then we can wrap it up from there. So at this point, like I said, we want to be looking for some type of strong high that was created that was then led to an aggressive push to the downside. It looks like I see something right here that we can actually do. So, oh, it looks like this all matches up as well. Okay, yeah, we can do this. I apologize for these the airplanes in the background. If you guys hear those, I promise you I will make sure that you won't hear them in the next videos. So anyways, right here we have a strong high being created, then led to an aggressive push down, aggressive move to the downside, right? Obviously we see this aggressive push down. So boom, in this case scenario, we want to mark out the candle that started that aggressive push to the downside, which we're going to mark out this blue candle right here that started that move, okay, this candle right here. So we get our box out, our zone, we mark out that candle. Since that candle is not super large, obviously, we can mark out the whole candle still and not only mark out the halfway point. We extend this zone all the way out, and as you can see, we get two beautiful rejections off of our supply zone. One where we tap in, looks like market closed right when we tapped in, but still, or we actually tapped back in. So market open, we tapped back into the supply zone, and boom, beautiful rejection to the downside off of this 30-minute supply. Also keep in mind, the higher the time frame you have for a specific zone, the more confirmation you have within that specific zone. Okay, so I'm not saying that 5-minute zones or 15-minute zones or 1-minute zones won't be valid, but typically when you do have these 30-minute zones marked out, when they are visible to you, you definitely do want to look to take advantage of them, whether you're treating it as some sort of entry area or some sort of exit area. Okay, you don't only have to treat your zones as an entry area, you can also treat them as an exit area, because we understand at these specific zones price is likely to provide those zones are likely to provide price with a reversal. Therefore, we can take advantage of those zones and exit right when price does tap into those zones and does reverse, so we can obviously catch the most profits possible. We can also then see price taps back into our zone again. Beautiful. Let's say we were to take shorts on this. We would boom, enter right there inside of the zone once we start to see signs of selling pressure. Stop loss, like I said, for me is almost always in the same spot. That's going to be a full break above and invalidation above our supply zone. Okay, beautiful. Now, and then obviously we would just target the most recent lows, or if you want to look for something a bit bigger, you can target these lows down here, or you can even target these lows down here, and you can see price literally from that supply zone absolutely ripped to the downside. Okay, so let's go ahead and do one more demand zone, and then we can wrap it up for this part of the bootcamp. Now, as we see here, you can see we have a strong low being created. It looks like we have multiple strong lows on this one. So we can actually, let's say we can do this one here. We can do this one here, right? Because this really provided us with that move. So we have a strong low being created right here, right? I'll go ahead and mark that out for you. So a strong low created right here, then led to an aggressive push to the upside, right? Indicating that at this point, well, what just happened? Give me 1 second. Okay, yes, so indicating that at this point, right here, down here, is where those buyers initially stepped in heavier than usual, okay? Buyers and sellers are constantly being inputted within the markets. We want to look for areas where they stepped in heavier than usual, where they're being inputted more than usual, okay? So let's go ahead, get rid of this. Now we can clearly see here that this candle that started the move is quite big, or we can go off this one as well. So for this, we can just mark out the wick. Now, if the wick of the candle that started the move is pretty reasonably sized, then you don't have to mark out the halfway point. You can just mark out the whole wick. Okay, keep in mind, only mark out the halfway point of a candle if the candle or wick is very, very large, and so large to the point where it makes your zone wide. Okay, these airplanes are so loud, I apologize for that. Now, as you can see, we created our demand zone, we extended it out both times of tapping in. Let's see if even, looks like it almost missed that. So multiple different times, you can see it provides us with a reversal, but we want to mainly focus on the first or second rejections. So here would be the first rejection going into this demand, second rejection going into this demand, and you can see both times we had a beautiful rejection up and beautiful rejection up and reversal on both of those rejection points. So both would obviously be beautiful setups to obviously go for long off of those demand zones. So boom, let's say we entered off of that rejection, stop loss, like I said, almost always in the same spot for me, just going to be an invalidation below or above my zone if I'm trading the specific setup. We can target the previous highs. So in this case scenario, we have highs pretty much created right here, or we can target these highs up here, right here. So let's say we were targeting those highs all the way up there. You can still see price tapped into our demand, absolutely got a beautiful reversal to the upside off of our 30-minute demand. Now, let's go ahead and go to the 5-minute and kind of go over a couple of things that we just went over on 30 minutes. So as I said, if we can match our supply and demand zones on multiple different time frames within the same area, that's money. That's even more confirmation for you. So obviously you can see here is where our demand zone was initially created and started. So let's try and match this up on the 5-minute. We can see here, strong low being created, then led to an aggressive push to the upside. So we pretty much just want to mark out the candle that started that move. Looks like we could even also mark out this candle right here. This is where everything was started. Or we can mark out this blue candle right here. So what I'm going to do is I'm going to mark out this blue candle right here, because this initially was the candle that ultimately led us to that aggressive push up. So let's go ahead and mark this out on the 5-minute. We're just going to mark out the candlestick body, extend it out all the way, and you can see it matches up almost perfectly with our 30-minute zone. Keep in mind, vice versa, same thing would apply to a supply zone, okay? If you can match up those zones on multiple different time frames. Boom, taps into our 5 and 30-minute demand zone, and we get an absolutely beautiful move and rejection to the upside up to these highs. Same thing here, taps into our 5 and 30-minute demand zone. We get an absolutely beautiful, beautiful move to the upside right off of our demand zone. So this was literally the low of that crazy move being started off of that demand zone that we had drawn out together. So that's going to be it for this video and for this part of the bootcamp. I hope you guys found some value from this, and I will see you guys in the next bootcamp video.